And if you want to know what to buy on the way down, this is a seasonal stock that should take out its high. And I say that because the amount of merchandise, for instance, in a Nordstrom that he talks about, that is surfeit, that they have to get rid of, just as just money in the bank for TJX.
Yeah, tons of opportunities to pick up a lot of high quality merchandise at discount prices and then pass them on to consumers at those fire sale prices. But Jim, you brought up the point, if things come down. We made some trims this morning because the oscillator, which we really hold ourselves to, very overbought, about 8.48% after Friday's rally. Anything above 4% means we're overbought. So much like when we hold our nose and buy when things get oversold, now we're making some trims because we're overbought. And
to further on that, there were some stocks I did want to buy, and that's just off the table. We just don't buy up here. We continue to trim. The oscillator is something that's worked for me. Started in 1987 that I started looking at it. It's worked for me. There's only been 2 periods where it did not work for me, and one of them was COVID, and the other was the 2007-2009 Great Recession. I think both of them are not within the realm of what we're looking at. So we do have to keep trimming. I hate to do that, and the reason I hate to continue to trim, very simply, and I think this is important, is I really like our portfolio.
Yeah,
but it doesn't matter. Which brings us to Honeywell. Honeywell this morning, there was a piece which said it's doing well because it has pricing. That's wrong. It's doing very well because it reshuffled its portfolio to where it's in the right place, right stocks at the right time, right divisions at the right time.
Aerospace recovery. We know flight hours are increasing significantly in this post-COVID world. Their healthy buildings unit was absolutely on fire, double-digit organic sales growth. And of course, their oil and gas business is seeing a huge inflow of investment given all the activity that's happening there. But at the same time, Jim, we recently added to our position 50 shares, September 13th at 188, another 25 shares at 170. So, we don't like to, we're not a hedge fund. We don't like to flip things, but we sold what we bought back.
Hello, guys. So, I just wanted to give a reaction to that. And what I'm going to do also is I'm going to continue playing it and tell you some of the things. So what we have to understand that this is an investment club, and some of the decisions they make sometimes may not always sounds better for you. So what I'm saying that they did talk about TJX, which is I think it's still a great stock, but I think at 72 there is no way you could buy that stock. And I just want to touch a little bit on Honeywell and Costco, as you were saying. And Jim Cramer was saying Honeywell. Well, if you had bought those stocks at a higher price, I know he will get into the stuff like Nvidia. If you buy Honeywell and Costco at a higher price and you're actually waiting for things to come back, I mean, you really can't do as they're doing. So it's a little bit of a contradiction with them saying they don't get in and out of stocks, and he's been saying that for a while, but now we see that they are getting in and out of stock. And if you guys understand that, according to guys like Warren Buffett and others, that every year the stock market change, every year new things come about. So we can't just get in and sell stock and get in, get out, get in, get out. It just doesn't work. But I still think Starbucks is good. I still think that you cannot buy as good as they think TJX, and I think TJX could be a good stock, but the investment club had some misses before, so you got to be very careful when you're buying, because they had misses as from Wayne, people lost money, and PayPal. So just take that with a grain of salt. So what I'm going to go back to the video in a minute, and I just wanted to not get track of what I wanted to say. So I just wanted to react to that part of it where you cannot get in and out. And it seems like a bit of a contradiction where they're saying they're trimming here. Like this morning, I know they say they trim certain stock and they will sell and buy back, sell and buy back. Well, if you're down and you're down $1,000, $2,000 and you really can't trim that stock, your best bet is to hold on to that stock. As we says, the market change over every 10 years. So if you could hold a stock for 2-3 years, then you could see profit and you will be in a better place. And if these stocks give dividend again, is a better place. But you really cannot follow this strategy. This is a company that has millions of dollars. If you're somebody just trying to invest, be very, very, very careful of getting in and out. Your best bet is to hold on and wait maybe for 6 months to a year till things turn around if you believe in the stock. Now, if you don't believe in the stock and you want to trim, I would say go ahead, get out. If it's a bad stock, like a stock they recommended in the past, like AU or PayPal, get out, put your money before you drop if it's something that's in free fall. If it's a stock that you believe in, like NVIDIA, I say hold on to these stocks. So I'm going to go back and I'm going to continue playing it and give you some more reaction as they talk about the chip stock. So let's go back and do that.
Over the past month at much lower prices.
We have to do that. You've seen us do that a couple of times. I know we're going to end up having, now some of that's different. I mean, for instance, we sold Estee Lauder in the 350s. We've been buying back here. Obviously, it's got too much China for people's taste, and China's in lockdown mode.
Mm-hmm.
I did expect that the Chinese have their own reverse mRNA vaccine, but they have not issued it. President Xi seems to be stubborn in his consideration that there can be no change in his status.
And Estee Lauder reports later this week. If it gets hit, we'll probably look to
I think
buy
that's the right way
below our lowest
Can't buy anymore now because of the oscillator.
Yeah.
Now, the semis are worth talking about because the semis have been our Achilles heel. I was with someone this weekend who was saying, you overstayed your welcome in NVIDIA. And I said, no kidding. But the problem is, as I mentioned last night's, and please take these seriously, the ones I said on Sunday night, this is very soul searching. When you have a stock that you've got giant gains, just giant gains, you tend to be more partial to it than perhaps you should be. Mm-hmm. And in the case of NVIDIA, I did not take the evasive action that I should have, in part because it had been such a winner for us. And did we know? I mean, yes, we did.
We sold a ton in April, but then we thought that would be the right sizing.
We thought that would be enough to right size
it,
and that was fantastic. We took the big game. Remember, the point of this is so many people were kind enough to talk about. The point of our product is not to show, wow, you know what, NVIDIA, bad job, NVIDIA, good job. It's why human nature failed us and me on NVIDIA. I became too enamored of it. I thought that the entire process of having the single best chip, fastest in the world, would just be fantastic. I never foresaw that our government would then limit that chip because it could be used by the PLA against us.
And that's our chief concern, why we trimmed NVIDIA, why also we trimmed Marvell Tech this morning. Both gains on
a lot of China.
Yeah. So it's about reducing our exposure to that risk.
Right. And we did wait. Now, this is fortunate. These were not at bottom sales. They had nice movement.
Nice moves last week. Yeah.
Right. They had nice movement. Now, Qualcomm is going to be a bit of a quandary. And the reason I say that is because Qualcomm uniquely has cell phone and auto, does not have data center. And data center is where there are a lot of problems. Yeah. So, and this also is 9 times earnings.
Right. Of course. The difference is this trades around 40.
I know.
And this is single digit.
So I'm anxious to buy more Qualcomm
with the dividend.
Yeah. If this goes, if this goes to 110 and the oscillator is in our direction, I think we'd want to do that. Now, win is something you've done a lot of work on. It's been a small position, but we should talk about it because we did feel that it was undervalued.
I think so. That's why we've held on to this really small number of shares. But it's in the headlines today after billionaire and CEO of Landry's, Tillman Fertitta, reports a 6.1 stake in the gaming operator. And it's so interesting because as the CEO of Landry's, they own the Golden Nugget in Vegas. So he obviously has a lot of knowledge about the industry.
And he's certainly
perhaps one of the most, really.
Right. Steve Wynn. I mean, this is one. Steve's no longer involved in it. Michael Maddox, who was Steve Wynn's person, no longer involved in it. They have a remarkable presence in Vegas. They don't have as good a football team as I thought they would have.
So it's a passive stake. We don't really know what he's going to do with it. Maybe he does something. Maybe he.
All right, guys, welcome back. Thank you. I just wanted to touch base on that. There was a lot to digest, but let's just talk about Win first, and then I will talk about the chip stocks and give you my reaction to what it says. Well, Win, that was one of the stocks that they did miss an early up in the club. We did buy Win at around 110. Now they're showing Win at what, $60-something. And these are the things you have to be very, very careful of, because I've lost a lot of money and win. So when you see those things, just remember that not just because they're saying it, you just can't go and buy it, but you still have to do your work, and you still have to take it with a grain of salt. Because I said there before, there is a big company. So if they're buying something, most of the times, and you believe that stock and you know what the market is, and you believe that stock is going to go down, your best bet sometimes is to wait. As I said, they have millions of dollars playing with. We as small investors don't have. So you got to be very, very careful. But the investment club did make a miss on Win. And yeah, I didn't know why they didn't mention that, but Win was one of the stock that I said they had some misses. So I don't want you to listen to this and think that, okay, every stock that they say buy, you're going to make money, because that's not how it works for me. I have lost money listening to some of those stuff, and then I have to realize I have to pick and decide which things I should buy. And another thing you should really look at is dividend. If these stocks are giving you dividend, I know they talk about Estee Lauder, and I've been talking about it all week, telling you guys that that was a good stock to buy. But again, be careful. That stock has a lot of China exposure, but they deal with makeup and skincare. It's still a good stock, but be very careful, because I think they give a very small dividend. So you're looking for companies that give you a decent dividend, or companies that you believe in. Skincare, do I know? I would prefer go with a Microsoft or a Nvidia, which I'm going to talk about, which is a lot. So let me talk about the chip stock that Jim Cramer just talked about, because he touched on Nvidia and the club selling Nvidia higher and then buying back Nvidia. Now, if you did where you went all in Nvidia like I did, I think I had over $10,000 to $15,000 worth of Nvidia, and you see that stock start dropping. Well, you can't do like them, because again, it's another contradiction. You cannot just sell your Nvidia and then think you're going to buy it back and make money. It's kind of difficult. So if it's a company like Nvidia, you have a Microsoft, you have a AMD, and you believe in this company, what you could do is just hold on. Hold on. If these companies are as great as he's saying they're great, things will bounce back. But to go in and out, it seems like he's really contradicting right now, because in past he has said that he's not a hedge fund, and the investment club is not a hedge fund. They don't go and try to catch the bottom. So guys, I would say like I did, in Nvidia, I hold on to Nvidia. I am still holding on into Nvidia. I'm down $6,000, but I'm holding on to Nvidia because I believe in the company. Also, companies like Marvel, the same thing implies in Marvel, that if you believe that Marvel going to be great and you think it's a great company, I don't see the reason to try to get in and get out. I just don't see it. So I would say, even you're looking at some tech company, try to go with a dividend. Try to get companies with a dividend where can kind of soften the blow. And yeah, the get in and get out, I don't think you could really follow them in get in and get out. They're playing with $1 million of cash, but you could hold on still and wait for things to turn around. As Warren Buffett says, every 10 years the market turns around, and that's how he made a lot of money in Coca-Cola. I'm not saying you're going to have to wait like 10 years, but I'm saying within 2 years, I don't think what happened in here will continue to happen. Another thing I wanted to touch quick on with, they did talk about the chips in China, and the government putting some pressure on. As you could see that Joe Biden seemed to be a little tougher on China than Donald Trump. So that's the reason why. And we think there's a lot of things that has to happen. And you can't just be starting to going in and out. I mean, if the war in Ukraine stop, if we get hold of inflation, there's a lot of things that could happen that could change the market. So guys, my advice to you is hold on. Try to hold on and let me know. Hey, if it's my first time doing this video, this reaction video, so if you're enjoying it, please comment and subscribe, and please don't forget to leave a comment. So guys, thank you for watching the video. See you tomorrow morning with the next reaction video.